So Bernie has laid out how he's going to pay for all these socialist programs like every other developed country in the world has, that we should too. And it's pretty straightforward stuff. I lay it all out right here, and I think you'll find it fascinating. Check it out, leave your comments, ding the bell, share it with your friends, and subscribe to our channel, please. You know, prior to Ronald Reagan, the top tax rate in the United States was 74%. Reagan dropped that down to 28% in the 1980s. And that 74% top tax rate and the corporate tax rate was over 35%. During the Eisenhower administration, for example, corporate income taxes paid for fully 1/3 of the cost of government. Now it's down to like 5%. So basically, if we just roll back Reaganism, we've got enough money to pay for all these programs. And Bernie isn't even talking about really rolling back Reaganism. I mean, keep in mind, as I said, you know, the top tax rate during the Franklin D. Roosevelt administration was 91%. During the Harry Truman administration was 91%. Truman wasn't complaining about it. During the Eisenhower, all 8 years of Dwight Eisenhower, Republican, it was 91%. Dwight Eisenhower wasn't complaining about it. John Kennedy, 91%. Lyndon Johnson, 91%. Richard Nixon, 91%. Well, actually, Lyndon Johnson dropped it down to 74%. So then it became 74% for Richard Nixon, 74% for Jerry Ford, 74% for Jimmy Carter. And during that period of time, we had the most robust economy, the fastest growth of the American middle class, literally in the history of our country, which came to a screeching halt when when Ronald Reagan dropped that top tax rate. And this is, I mean, along with unions, the main driver of building that middle class was that top tax rate, because what it did was, instead of, you know, people accumulating more and more cash in their own private, you know, Swiss bank account, instead of the Jeff Bezos and Bill Gates of the world becoming, you know, multi-billionaires, and keep in mind, $1 billion is $1 million 1,000 times, and then you get, you know, tens of billions of dollars. That's the, you know, it's mind-boggling, the amounts of money. That just didn't used to happen, because instead of taking the money out and sticking it in their checking account, you know, or, you know, however they would do it, people like Mark Zuckerberg back in the day would reinvest that money in their company and pay their employees better. You know, that top tax rate actually encouraged the growth of small and medium business, as well as made large businesses healthy. So Bernie has laid this out, and you know, in a very straightforward fashion. And I'll just go through it very quickly for you. He wants to expand Social Security so that everybody on low-income senior citizens and people with disabilities will get an additional $1,300 a year by increasing benefits. How is he going to do this? He's going to have the wealthiest 1.8% of Americans, that's people who make more than $250,000 a year, pay the same Social Security tax that you pay and that I pay. And that, by the way, will extend the solvency of Social Security to 2070. And beyond. I mean, that's just like, that's the end point for the math. He wants to end homelessness. That's going to cost $2.5 trillion. How does he do that? He puts a wealth tax on the top 0.1%. You have to have at least $32 million, and you are going to start paying a tax on your wealth, just like I pay, and probably you pay, a wealth tax on your property, on your house. And even if you're renting, you're paying a wealth tax. It's called a property tax. Every year, you know, your house may be worth, say, you know, $100,000, but every year, year after year after year, you still have to pay that property tax. That's a wealth tax that the middle class has been paying for generations. And all Bernie and Elizabeth Warren are both saying is, let's have the multimillionaires and billionaires pay a wealth tax on the money in their money bin. Right? If they want to take a deep dive and, you know, and swim in their piles of money in their money bin, just pay a property tax on it. And we're not even talking about a property tax that's anywhere as high as what the middle class pays on real estate property. And this would be a property tax that's like, you know, 0.1%, or at the most 1%, was Elizabeth Warren's suggestion. Universal pre-K, that'll cost $1.5 trillion. Again, that wealth tax will cover that. Eliminating medical debt. There's $81 billion in past due medical debt held by 79 million Americans. And Bernie just wants to completely pay that off. And how does he do that? With a income inequality tax on large corporations that pay their CEOs more than 50 times what their workers make. Keep in mind, when Ronald Reagan came into office in 1980, the average American CEO made 30 times what his lowest paid worker makes. Now it's hundreds to thousands of times. Bernie is saying if your company makes more than 50 times, or pays more than 50 times to your CEO, then that tax is going to go up. And that's going to pay for universal pre-K. The Green New Deal, this is $16.5 trillion. And he's going to pay for this by, number one, raising $3 trillion by making the fossil fuel industry pay for their pollution. Gee, what a novel idea. Secondly, generating $6.4 trillion in revenue from the wholesale energy that is produced by the power marketing administrations. By the way, if we replace our energy systems with renewable energies, after 2035, electricity will be virtually free outside of maintenance and operation costs. He wants to reduce defense spending by $1.2 trillion, but it's not just let's cut defense. Specifically, the part of defense spending that Bernie wants to cut is that $1.2 trillion a year that we spend protecting shipping lanes for oil coming to the United States. It's a subsidy to the oil industry. He wants to eliminate that. He'll pay for the Green New Deal with a $2.3 trillion in a new income tax revenue on the 20 million new jobs that are going to be created by the Green New Deal. This is sort of like the way that the GI Bill paid for itself back in the 40s, 50s, and 60s, was because people who went to college for free on the GI Bill made more in income, and so they paid more in taxes, and that's what, this is the same thing. And he's going to raise $2 trillion in revenue by having large corporations pay their fair share of taxes. And by the way, we'll save $70 trillion over the next 80 years if we can get global warming under control. And if we don't, it's going to cost us $34 trillion by the end of the century. He pays for his Medicare for all with a 4% income-based premium tax paid by employees who make more than $29,000 a year. If you make less than $29,000 a year, you pay nothing and you get complete health care. Make more than $29,000, it's a 4% tax. This is pretty much what you're paying right now as your Medicare tax. It might be slightly higher. I'm not sure exactly what the Medicare part of FICA is. But in 2018, the last year we have numbers for, the typical working family paid $6,015 in premiums. Under this option, the typical family of four is going to pay $1,240 a year in premiums. So the average family of four who makes more than $29,000 a year will save almost $5,000 a year, $4,700 a year. And if you make less than 29 grand a year, you pay nothing. And then he's going to, right now, employers also have to pay into FICA to cover the employer's portion of the Medicare costs. That will be a 7.5% tax. But if you have a small business like mine, I've got a small company here. We've got 4 or 5 employees. We've got I think 3 full-time employees and 4 or 5 part-time employees. And a company like ours that has less than $1 million in payroll will pay nothing, which will help small businesses. Boy, am I excited about that. Because in 2018, employers like me paid an average of $14,000 per employee in private health insurance premiums. And that's going to go to zero. So, I'll save money. And, and the average family will save $4,500. He's going to raise the top marginal income tax rate to 52% on income over $10 million. Keep in mind, it was at 74% when Ronald Reagan came into office. It was at 91% when Lyndon Johnson came into office. And the economy did better during that period of time than any time in the history of the United States. He's going to tax capital gains. In other words, Paris Hilton's sitting on her butt getting her dividend checks. That's how she makes her living. Right now, she pays almost nothing in taxes, 15%. He's going to raise that up to, you pay the same thing in tax. If you make your money with money, you're going to pay the same income taxes if you make your money laying bricks or doing a radio show or whatever it may be. He's going to close the loopholes in the estate tax. That'll raise money, $2.5 trillion over 10 years. and he's going to raise the corporate income tax rate to 35%. All of that will pay for the Green New Deal. And so, basically, and the math actually works. It all works.